Video, we'll be going over IRS Form 4768, application for extension of time to file a return and or pay U.S. estate and generation skipping transfer taxes. That sounds like a mouthful. So we covered this tax form in a video about a year ago, March of 2023, when we first started this YouTube channel, but I wanted to go back and re-record this as we've also updated the accompanying article and provide a more comprehensive overview of this tax form. So obviously this would be an extension request for estate tax returns or generation skipping transfer tax returns, which are filed on IRS Form 706 or some variation thereof. So there are 4 parts to this tax form, and we'll go over each of them in detail. So part 1 is the identification, where we actually identify the decedent and the executor of the decedent's estate. In part 2, the extension of time to file. So we'll identify the form and the type of extension that we're looking at. Part 3 is the extension of time to pay. So if you actually need to extend your time to pay, you can do that in part 3. Part 4 would be for any accompanying payments. And then there's the signature field at the bottom. So we are going to go to the top of the form and kind of cover the first part. So in part 1, we're simply going to identify the decedent. So in this case, our hero tragically died. John Doe, his date of death, let's just say it was June 1st of 2023. His executor is a guy by the name of William Smith. If there's someone other than the executor that is filing this tax return, you can put that person's name here. Here is John Doe's social security number, and then the executor's address with the city and state and zip code, the original due date of the estate tax return. So this would be the date that the tax return was originally due. And then in the lower right corner, we're going to put in the phone number, the daytime phone number of the executor. And now we're going to part 2. This is the extension of time to file your respective tax return under Internal Revenue Code section 6081. So at the very top, we're selecting Form 706, which is your basic generic estate and generation skipping transfer tax return. You can also choose from IRS Form 706A, which is the United States additional estate tax return. You can choose 706NA, which is a estate tax return for a resident who is or the estate of a non-resident who's not a citizen of the United States. And finally, Form 706 QDT, which is a tax return for qualified domestic trusts. So in this form, there are 3 different types of extensions that you can request for your tax return, depending on the situation. So in the automatic extension request field, this is for any estate tax return, any type, and it's an automatic 6-month extension of time to file. So as long as you have not passed the due date, for example, if we're recording this video in April of 2024, this would be too late. This is a hypothetical situation, so we're just going with it. But technically, this would be an incorrect tax form. So if you're requesting an automatic extension, all you have to do is select this, and then you can mosey on down to part 3, part 4 as necessary. Now, it's important to note that if your extension request is approved, the IRS generally will not inform you of that. So you're basically operating off of a kind of a negative permission. So you proceed as if it was approved unless you get notification otherwise. So to that point, as the executor, you should make sure that you have updated your address on file. So if your address is incorrect and the IRS sends you a disapproval, then odds are likely that you might run afoul of the tax rules and not know about it. So to change your address, you can file IRS Form 8822, which is the change of address notification form, or you can change your business address or responsible party by filing IRS Form 8822-B. So we'll put links to those resources in the show notes for you. So if you are applying for an extension for cause, or if the Form 4768 was not filed in good time for an automatic extension, you can check this box, but then you also have to attach a statement that goes into detail about why you didn't make that request, or why it was impossible or impractical to file by the due date, and the specific reasons why you have good cause in not requesting that automatic extension. So if this is approved, then your 6-month extension will run from the original due date of the return. So again, if we put this into place now, if we check this now, and the recording date is April 5th, let's just say, then if we got an extension under this circumstance, the revised due date would be September 1st, 2024, not October 5th. So that's how that would work. Now, the third one is an additional extension, and this primarily only applies to an executor who is out of the United States. They can request an extension of time beyond the 6-month extension, but that person must also attach a statement that goes into detail about why it was impractical or impossible to file. So for Form 706A or 706 QDT filers, the qualified heir or the trustee or designated filer must also include the date and a description of the taxable event. For example, a tax return for 706 QDT may be required when that trust ceases to become a qualified domestic trust. So you would have to include a description of what happened to cause that event to occur. So a couple of notes from the form instructions. The IRS encourages executors who may need additional time to separately request an automatic extension first. So first you should apply for this. Then if you need additional time, you can file for one of these. However, you cannot include a request for both in the same tax form. That would not be allowed. You would have to create and file Form 4768 for the automatic extension, and then you would have to create a separate form for the appropriate extension. You should file an application for an additional extension early enough for the IRS to consider the application before that extension date comes due. So under both of these scenarios, again, the IRS generally won't notify you with an approval or an effective date. You should plan to, so if you apply for the additional extension, you're including a statement, but then you're also entering your extension date requested. So let's just say that you requested an extension to December of 2024. If this is approved, the IRS generally won't send you a notification that this was approved. So a personal note is that when I was researching this particular form, I was trying to find any guidance on how long you can request an extension for filing an estate return. So nothing in the federal law, in the Treasury regulations, or in the IRS guidance shows anything specific about an extension for filing a return. There is guidance in the Internal Revenue Manual uh, with that discusses the extension to pay estate taxes that are owed. So those are two different things, but the guidance under that kind of says that the IRS can grant extension requests for time to pay up to 12 months at a time for a maximum of 10 years. For a deficiency, if the IRS has already assessed a deficiency, then that limit is 4 years. But again, up to a year at a time. I only say that as kind of a rough proxy and as a stipulation to the following. You can't expect that an IRS employee is going to have to sit down and determine whether or not they approve or disapprove this form. And if there isn't publicly available concrete information that directs them one way or the other, then there's a possibility they might have to use some sort of judgment based on everything that you're presenting to that person. So if you're a document heavy kind of person, if you're putting everything out there to make sure that that person has all the information they need, you might get a different result than someone that skips a lot of steps and just gets a form in there with really no background. So before you submit this form, take a moment to step back from your situation and imagine yourself in the shoes of an IRS employee that has to make a determination. And there is additional guidance that says that with each additional extension, there is kind of a hierarchy of how high these forms get escalated at a supervisory level within the IRS. So just take that into consideration when you are trying to apply for an extension. You're basically requesting someone to exercise their judgment in your favor, and so it's incumbent on you as the executor to try to help them out. And I usually advise people that their goal is to get the person on the end of the other end of the form to say yes. So get that person to yes. In Part 3, this is the request for an extension of time to pay under Internal Revenue Code 6161. As I mentioned, the IRS can approve extensions in this circumstance for up to a year at a time for 10 years, unless there's already an assessed deficiency, then that would be 4 years. So you do need to provide reasonable cause. The Treasury regulations kind of indicate a couple of examples of reasonable cause, such as the estate may have sufficient liquid assets to pay an estate tax, but if they're located in a bunch of different places, the executor might have difficulty trying to get that money. So if you have, say, probate in 4 different states and you can only get enough money to pay the tax bill by collecting from accounts in different states, it may take you a little bit longer to go through that process. If a substantial part of the estate consists of assets with rights to future payments. So maybe you have enough assets, but you can't really do anything with rights to future payments until those payments come in. If the estate includes a claim to substantial assets subject to litigation, that may be reasonable cause because you have to play the litigation out and see where the estate stands. Or if the estate doesn't have sufficient funds, even if you've made reasonable efforts to convert assets into cash. And again, the term reasonable, that's a subjective term. If you talk to the IRS and request guidance on this, just understand that the IRS will always ask you to pay as much money as possible. We'll get to that momentarily. So as the executor, you kind of have to balance the needs of the estate versus the needs and demands of the IRS. So if you cannot determine the taxes because the size of the gross estate is unascertainable, for example, if a lot of it is under litigation, then you would check here. You would put 0 on line 3 down here. You can enter your extension date requested here, but not more than 12 months at a clip. And then you would check the appropriate box. So if this is for the tax that was due or will be due with the original return, you would click there. If it's for an amended return, you would click this box. If it's because of an IRS examination, you would click the third box. And if there is an installment payment involved, then you would click the final box. So in part 4, we will kind of go over the expected payment to accompany your extension request. So in line 1, you would enter the amount of estimated either estate or generation skipping transfer tax. In line 2, you would have to complete line 1 because you're already saying that you're short on cash. So you have to attach an explanation to complete part 3. But you would enter the amount of cash that you are not able to pay. And then you would subtract that amount, and line 3 would result in the amount that you're going to pay with your extension request. So let's imagine that we owed $100,000, but Mr. Smith is only able to, he's able to scare up enough assets, but he's still going to be $50,000 short. So the balance due, what he planned to pay would be $50,000. So I know that's a little confusing. Let's kind of start the way I would do it. So $100,000 tax bill, I look at my assets and I determine that I can only pay $10,000, which means that $90,000 is my shortfall. So that's how you would do that. And again, the IRS is going to highly encourage you to pay as much as possible. But as an executor, you're actually, a fiduciary for the estate. So any amount that you get an extension on, you're going to be paying interest. You may not be paying a penalty, but you'll be paying interest on that. So what you need to consider is kind of the balance between having so much cash in your account that you could have paid down the interest, and that cash is doing nothing for you. So having an excess amount of cash above and beyond the needs to operate the estate and keep it solvent versus all of your other outstanding debts and payments and requirement payments and things of that nature versus some kind of self-imposed time frame to liquidate a bunch of highly illiquid assets at a deep discount simply to come up with enough cash to pay a tax bill. So you have to balance that, use a little bit of judgment. So just understand that the IRS will highly encourage you and make sure that you feel the pressure to pay as much as you can, but you have to balance that with your fiduciary obligations. So in the signature field, if you're the executor, you would sign this, enter your title and the date. If this is completed by someone other than the executor, which we'll cover in a moment, then you would enter the specific, outline of where you are. So if you're an attorney, you would put the jurisdiction where you have good standing. If you're a CPA, again, you would put the jurisdiction or the state where you are qualified to practice. If you're an enrolled agent, you just click the box. If you're an agent that's holding a power of attorney, then you don't need to submit the power of attorney unless it's specifically requested from the IRS. So, so people that other than estate executors and persons recognized to practice, a qualified heir who plans to file Form 706A can file the extension request for that appropriate form, or a trustee or designated filer for IRS Form 706-QDT can file the extension request for that tax form. So Generally, there's an address. There's one address at the bottom of the form. It's just off of the screen. Let me see if I can pull it up. Unfortunately not. I apologize. So so sorry for the glitch here. Unfortunately, I can't bring this up. Let me see if I can do one more thing. There we go. So you would mail this to the IRS Center in Florence, Kentucky. This is the mailing instruction. And again, you're supposed to mail this in conjunction with your stated payment. So if you are sending a check or a money order, you would want to make that out to U.S. Treasury. Put the instructions actually tell you that you should put the decedent's name and social security number on the check, so that the IRS knows who that check is for. And if you are using FedEx, DHL, or UPS, or a private delivery service, there is a separate address. You can find that in the article that we'll put a link to in the show notes. So I think that covers everything that I wanted to talk about with IRS Form 4768. So we do go into a little bit more detail in our article. So if you want to use that as kind of a step-by-step guide for walking through your actual request, feel free to do so. Simply click the link in the show notes or go to our website, teachmepersonalfinance.com, type in IRS Form 4768, and you should see the article appear. So if you like our articles, please subscribe to our newsletter. If you like our YouTube videos, please subscribe to our channel. And if you have any questions or comments, or if there's another topic that you would like to see in an upcoming video, please hit me up in the comments section. Thank you very much and have a great day.